There's no doubt that investors love Flexi Cap funds. They are more popular than any other diversified equity category. The category has the highest assets under management. Not just that, Flexi Cap funds also get the maximum investments. Take the example of last quarter. The net inflow into the category was around 15,000 crore. These funds are popular because they can invest anywhere in the market without restrictions. If the fund manager finds attractive investment opportunities in the mid caps or small caps, the fund can freely invest in these segments. Now, Parag Parikh Flexi Cap is the most popular fund in the category. In our previous videos, we have discussed it many times. So this time, we decided to look at the popular Flexi Cap funds other than Parag Parikh. Hello and welcome to ET Money's YouTube channel. Today we'll compare and analyze 3 Flexi Cap funds. These include HDFC Flexi Cap, Kotak Flexi Cap and Motilal Oswal Flexi Cap fund. HDFC and Kotak Flexi Caps are the second and third biggest schemes in the category after Parag Parikh. We chose Motilal Oswal Flexi Cap as it has the best one-year returns. This comparison is going to be very interesting for 2 reasons. 1. We are examining funds from the most popular equity category. And 2. We have picked the most popular funds. But before we proceed further, there's one thing we want to point out. We won't tell you which fund is the best among the 3 schemes. Instead, we'll analyze their investment style and performance in detail. Based on the data presented in the video, you'll definitely be able to choose the fund that best suits your needs. This video is part of our series where we compare different funds to help you invest better. To know other funds we have covered, head to the playlist section and check fund analysis and comparisons. This playlist has around 18 videos that include fund reviews and comparisons. So let's start the video by examining the investment strategy of the 3 funds. Before investing in a fund, it's essential to know if the fund manager follows an aggressive or conservative style of investing. Now, an aggressive fund will give you high returns when markets are doing well, but it will also fall more when markets correct. On the contrary, a fund with a conservative approach may not top the charts when markets rally, but it will stand out when markets fall. Understanding the investment style will help you keep the right expectations from the fund. So we'll analyze 3 funds on different parameters to understand how the fund managers invest. So let's first look at how the funds invest across large, mid and small cap segments. An aggressive fund would have a higher allocation to mid and small cap companies, whereas a conservative fund will always seek their comfort of large cap stocks. So when markets rally, aggressive funds tend to do well, and when there is a correction, conservative schemes stand out. As we have already discussed, Flexi Cap funds can invest across large, mid and small cap stocks. A look at the historical market cap allocation of these funds will tell us whether the fund manager has been using the flexibility to generate better returns for investors. So we looked at the past 6-year data for this. HDFC and Motilal Oswal Flexi Caps have reduced their allocation to large cap stocks over the years. HDFC Flexi Cap has reduced its allocation from 89% in 2019 to 72% in 2021. The fund manager increased large cap exposure in 2022 and 2023. But in 2024, the allocation to large caps again fell to 73% of the overall portfolio. Now, Motilal Flexi Cap's allocation has reduced drastically from 91% in November 2019 to 49% in 2024. On the other hand, Kotak Flexi Cap's large cap allocation has been range bound. It has ranged between 69% and 78%. These funds invested the rest of their assets or money to mid and small cap stocks. So let's look at the allocation to mid cap stocks. HDFC Flexi Cap's mid cap allocation went up from 6% in November 2019 to 14% in 2021. But the fund manager lowered it to 2% in November 2024. Kotak Flexi Cap's allocation to mid caps has ranged between 18% and 26%. The deviation is not much here. But things are different for Motilal Oswal Flexi Cap compared to other 2 schemes. Its allocation to mid caps have considerably increased from 7% in November 2019 to 45% in November 2024. Next, we also looked at the small cap allocation of these funds. None of the funds allocations to small caps have gone above 12% in the past 5 years. So HDFC Flexi Cap has a 10.87% allocation to small caps. Kotak Flexi Cap has 5.84%. Motilal Oswal Flexi Cap, on the other hand, had no exposure to small cap stocks as of November 2024. With the analysis so far, we conclude 4 things. First, Motilal Oswal's fund is the most nimble-footed, meaning it makes sharp changes in market cap allocation. It is also aggressively invested in mid caps. Motilal Oswal Flexi Cap can make swift changes in its portfolio as the fund is smaller than the other 2 schemes. With assets worth 12,000 crore, it is comparatively easier for the scheme to enter and exit mid and small stocks. HDFC and Kotak Flexi Caps manage over 50,000 crore rupees. So even if they invest or sell 1% of their assets in a stock, it would be worth 500 crore. With such a large amount, investing as much as they want in a small cap stock may not be possible due to liquidity issues. Also, this kind of investment in a small cap or even a mid cap stock can influence the price. And this takes us to the second observation. None of these funds are heavily invested in small cap stocks. Our third observation is about HDFC Flexi Cap. Even though the fund has reduced its exposure to large caps, it has maintained at least 73% allocation to them. And fourth, Kotak Flexi Cap's allocation has been the most stable among the 3 funds over the years. Now, keeping this analysis in mind, let's move on to the next part of our analysis. A portfolio turnover ratio is a useful metric that tells how frequently the fund manager buys or sells the stocks. A ratio of more than 100 means that the entire portfolio has changed in the past year. But there is nothing good or bad about a high or low portfolio turnover ratio. It just helps us understand the investment style of the fund manager. Motilal Oswal Flexi Cap is an outlier among the 3 funds. It has a turnover ratio of 152%. This is well above the category median of 70%. But the fund's turnover ratio was not so high historically. It was 50% in November 2022 and has increased since then. On the other hand, both HDFC and Kotak have a portfolio turnover ratio of less than 50%. This is well below the category average, and this has been the trend for past 5 years. Now the data shows that HDFC and Kotak Flexi Caps follow a buy and hold strategy. The frequent buying and selling by Motilal Oswal Flexi Cap indicates that it could be following the momentum investing style. If a portfolio has low number of stocks, it would be a concentrated portfolio. In this case, every stock on average would have a higher allocation in the portfolio. So a significant movement in any stock can impact the fund's performance. On the contrary, if the fund manager opts for diversification, the impact of any single stock on the portfolio is relatively low. So we looked at the November end portfolios. Both HDFC and Kotak Flexi Caps are adequately diversified. HDFC Flexi Cap has 52 stocks while Kotak Flexi Cap has 58 stocks in the portfolio. But Motilal has a highly concentrated portfolio with just 14 stocks. To summarize, HDFC and Kotak Flexi Caps have a similar investment style. They like the comfort of large caps, maintain adequate diversification and follow buy and hold investment strategy. Motilal Oswal Flexi Cap is entirely the opposite. It looks more like a fund that relies on momentum investing style and takes concentrated bets with a tilt towards mid caps. Now let's compare their returns. We'll look at the trailing, periodical and rolling returns of these funds to deeply understand their performance. Let's first start with trailing returns. Now for this, we compared the fund's returns with Nifty 500 index and also with average returns of the Flexi Cap category. All 3 funds have done better than the benchmark in the past year. While Motilal Oswal is the top performer in the past year, it has not done exceptionally well if you look at the past 5-year returns. With around 19% returns, it doesn't outperform Nifty 500 TRI index. Kotak Flexi Cap also underperformed the index and category average in the 5-year period. HDFC Flexi Cap has been more stable than other 2 funds. It has done better than the category average and the benchmark if you look at the past 1, 3 and 5-year returns. Next, we examined the periodical returns of these funds to see how they performed year over year. Now for this, we looked at funds' performance for the past 6 years. HDFC has outperformed its benchmark in 4 out of 6 years. Kotak's performance has not been exceptional. It has either underperformed the benchmark or the returns were close to the Nifty 50 index. On the other hand, Motilal has seen a turnaround in performance since 2023. Now, before 2023, the fund underperformed the benchmark every year since 2019. In the past 2 years, it has outperformed the Nifty 500 index. Last year was outstanding. It delivered 24 percentage points more than the benchmark. The fund delivered a return of 46%, while Nifty 500 TRI's return was 16%. Now, this could be attributed to the fund's higher allocation towards mid-cap stocks. While HDFC and Kotak follow a conservative approach, Motilal's aggressive strategy has paid off, as mid-caps have done better than large caps in recent years. We also checked the rolling returns of the funds for 3 years since 2019. HDFC Flexi Cap came at the top with 24.79% returns. Kotak Flexi Cap came next with an average return of 17.76%. Motilal Oswal Flexi Cap has an average of 14.1% returns. So while HDFC Flexi Cap did better than the benchmark, the other two lagged behind. The average return of Nifty 500 TRI index was 19.62%. Let's now look at how these funds behaved when markets fell. This will help us understand their downside protection. Since 2019, there have been only 7 quarters when Nifty 500 has delivered negative returns. HDFC Flexi Cap and Motilal Oswal Flexi Cap have underperformed only in 3 out of 7 quarters. Kotak Flexi Cap underperformed in 2. So all the 3 funds have put up a decent show when it comes to downside protection. Let's now move to the final part of the video. So our analysis shows that HDFC Flexi Cap and Kotak Flexi Cap have a conservative investment style. They both have a large cap tilt, follow a buy and hold strategy, and churn the portfolio less. This could be because of their size. Motilal Oswal Flexi Cap, on the other hand, is for adventurous investors who don't mind taking extra risks. It maintains a highly concentrated portfolio, invests aggressively in mid-caps, and has a high turnover ratio. From a performance point of view, Motilal has done better recently, while HDFC looks to be the most consistent player. Kotak has put up just about an average show. And with this, we have come to the end of this video. I hope you found the analysis helpful. If you did, please like the video and subscribe to our channel so you don't miss any of our videos. And I'll see you next time.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.